So we're really excited. You know, we met JP probably 4 years ago at some other conferences and stuff. And, you know, one of the things that we always talk about is sort of with cash and its impact on branches and the transformation and his knowledge and the work that his company does across the industry for these types of things. SLD has been very innovative and thoughtful, and it's international in sort of their perspective. And so we've had him 2 years ago, and he was a big hit. He even brought a book and gave everyone a book. I don't think he has books this year, so
no, too heavy.
But I know there's downloadable information and paper and stuff like that from him. But I'm proud to sort of introduce JP. He's going to come up and talk to you about sort of branch transformations and that process. So JP,
Great.
welcome.
Thanks.
Again, thank you for the organizers to invite me. I think the topic is very relevant. You know, why we were in a meeting with a large financial institution and they said, you know, we're having some challenges. What's the role of cash recyclers? Is money going away? What do we do with cash in the branches? Do we need to have cash drawers? What about vaults? Do we keep our vaults? Do we need to upgrade our ATMs? And so those are really important questions. And so we did a study. And this study is part of a bigger picture study. So for the last 5 years, we've been conducting consumer insight research studies and studies with the bankers. We've interviewed close to 23,000 consumers, probably 2,000 bankers through that process. We defined what seamless banking meant to customers and for banks. By the way, they don't align. We looked at branch transformation ROI, because the big question is, if we invest money in our branches, what's our rate of return? We did a big study, and then we got it validated by five of the largest banks. Find out, should we invest more in our branch network? And then obviously that led to the investment in digital signage. We did a big study. If your team is contemplating digital signage and doing the ROI and why should we invest in digital signage, we did a study on that. And then most recently, we interviewed 1,000 consumers and 300 bankers on the conversation of cash. And I'm going to share with you some top line if you want the detail of the study. Just at the end, I've got my email address. Just email me. I'll send you the full deck of studies. I love it. The fact is, financial brand consumers' relationship today is very transactional. Yeah, we talk about that we're shifting the relationship to more advice, but the reality, when you look at the behavior happening in the physical assets that you have, it is very transactional and it's driven by your customers, right? And so that's a challenge. And more importantly, in our studies, we identified that there is a rising level of anxiety amongst consumers. And by the way, that's global, right? We did this study in, I think, 20 different countries, and the level of anxiety, including China, is on the rise. And you have a role to play in helping manage that anxiety because you're the doorway to cash, their money. I think what's important to understand is we did a study in 2017 called Self-Attrition. We want to find out, with the growing demand for digital technology, are consumers more loyal? What we found out was, yes, you know, mobile devices are doing it. It's the primary channel for consumers doing banking today. I think 50%, more than 50% say that they bank predominantly on mobile devices. But it also opens a Pandora's box. What we found out was your most loyal customers, and that's why cash is so important, your most loyal customers are those that use all your channels. That the consumers who do, and it's about 12 or 13% of customers to 17% of customers, depending on the type of institution, do predominantly all their banking digitally. They're actually your least loyal customers. They're more apt to leave your financial institution because it's easy for them to just move, right? They don't have an emotional connection to the frontline staff in your branch. They don't visit your branches. There's no opportunity to leverage advice. They're getting their advice from other channels, not the bank. So heads up. So why banks? Why is it important for you? You know, obviously, the most obvious answer is it helps fund institutions, right? There's a big conversation that went on last year and the year before that the banks that didn't have a lot of deposits were having to fund they're flowed through borrowing money themselves. And so that obviously eats away at your margins, right? So having money in the bank allows you a lot of flexibility in managing that flow and investing that money and generating more profits and revenue. So it's obvious. So we asked bankers, 300 of those bankers, what's the status of handling money? And it's great that I'm presenting after this morning's presentation because, it's kind of scary when maybe the data doesn't align. And the good news, the headline, 100% aligns, and we have some answers that maybe couldn't be answered this morning in our study. And yes, it's only 1,000 consumers, it's directional, but it really talks about where the mindset. And for bankers, 77% of the bankers are saying they're handling more cash than before, right? They're handling more cash. And 72% of institutions have cash handling limits. So we asked, what is that limit? In our study, we go into and we look at size of institution, what's their limit. So it's good to go back and look at that study and find out how does your institution align with the limits you provide from the amount of cash you handle in your branches. Cash transaction usage is driven by ATMs, drive-thrus, and less so for the teller counters. Older consumers still use the teller counters, or the universal bankers, or the CSSs, whatever your institution calls them. 82% of the 16 to 28 responded to indicate drive-through and walk-up ATMs is their primary use for deposits and withdrawals. 68% of the older consumers indicate the teller counter, and then 36% of the 18 to 28 identified an increase in ATM usage. And so we've been tracking that since 2017. And yes, the primary channel for the younger generation is ATMs. And it's interesting, just stop for a minute. And I know you're not part of marketing, so you look at the logistics of money. But if you're part of marketing, why is it that the messaging that happens at the ATMs talks about things that generation has no relevancy? They're about travel. Why would we talk about travel credit cards? They're about experiential experiences. They're not about saving money for a mortgage, right? They're in the now moment, but we talk about the future and retirement and all of these other products that you want to sell, and when really the audience that you're talking to couldn't care less. So understanding that this channel is a primary channel for the younger consumers. We also talked about, where do you stand on the technology in your branches? And 70% plans to have a branch and drive-through ATMs. 51% have cash recyclers. And by the way, the 300 bankers, we did include Canada and Europe, bankers in those countries. And you'll see that this research skews a little bit because cash recyclers in North America is not at 51%. It's probably lower than that. A lot of banks are investing in that, but it's from a penetration standpoint, specifically credit unions, it's not there. 36% of in-branch ATMs and total lines followed by drive-through ATMs handle the most percentage of transactions. And 84% of bankers who work at desks have access to cash at the TCRs. How does that reflect with you in the audience? Are those numbers kind of align with what you're seeing in your own institutions? No? Is this a shock? Are these numbers a shock? No? Not sure, right? Banks are also accelerating their digital transformation, technology. It was interesting that we asked the question, in the future, where do you see the amount of cash you handle, and where do you see that cash being handled? And 23%, these are mostly European, see close to 100% of their transactions happening. Now, we do work around the world, and I will tell you that the average institution in Europe, and some of the individuals here who come from Europe will tell you that ATM transactions in Europe is about, on average, 80%, 80 to 90%. Some of the banks we work with, they're at 95%. They've done that, it took them 10 years to get there, but they moved that choreography towards ATMs, technology, and allow them to free up their universal bankers to do the things that they do best, which is drive revenue growth. Right. 52% of institutions are replacing existing ATMs with IATMs, and that's somewhat of a controversy because IATMs, what we've discovered talking to bankers, is actually more expensive than ATMs. I don't know if you're seeing that when you start factoring in the labor costs and the cost of technology. We've learned working with the institutions, the best place for IATMs is at the drive-through, where customers don't have access to a banker 24/7. 51% of institutions are moving to TCRs, and then 48% of institutions are swapping out drive-throughs lanes with it. How many of you have teller drive-through lanes? Yeah. Are you looking at replacing them with ATMs? Yeah. Yeah. That's a big movement. Again, labor costs. We asked consumers, is cash important to them? So bankers have indicated they're managing more cash. We asked consumers, what's your behavior in cash? Here's some insight. 78% response rank cash as the platform to manage your purchases, 72% rank credit cards, and 56% rank digital wallet. And we didn't talk today about digital wallet, but it is on the rise. We're noticing that is happening. It's either embedded in loyalty programs like Starbucks, or it is the tap technology. It's still linked to a credit card or a bank account, but it's that technology. 20% of response identify increase in cash usage. So not a big percentage. Really, the bulk of the percentage identified that there was no change in their cash usage. An interesting insight in our study, we asked them, 5 years ago, how much did you have lying around the house in cash? And they said on average about $250. And we said, today, how much do you have lying around in cash? It's more than double. Right? So consumers are, to this morning's presentation, consumers are stockpiling cash in their homes as a security net. Understand that, the importance of that. Digital wallet, obviously, where we saw the growth of digital wallet is actually in the so we looked at urban, suburban in the study. We looked at multi-ethnicity, Latinos, African Americans, new Americans, and we found out that the multidiscipline is a segment on its own that you need to really pay attention. It's a growing segment within your institutions. It's going to be a dominant segment. In Canada, it is the dominant segment. Caucasian consumers in Canada are a minority, believe it or not. We've done the flip. Right? In Toronto, I'm a minority. South Asians, Asians and other nation ethnicities are the dominant, and that changes the dynamic in banking. Online and budget control. So we asked them, why do you stop using cash? And what's really interesting in our study is the same reasons for not using cash is the same reason they're using cash. So it's actually the same percentage for people who don't use cash to the people who use cash. And obviously, budget control is really important. They're also looking at lack of confidence. We're seeing that a lot in the restaurant. Somebody asked, what's driving cash usage? We're seeing it in Canada. The restaurant industry, because of the rising cost of credit cards, are actually discounting if you pay cash. And we're seeing a growth of that now. And I'm sure you can start seeing that in the US as an offset to the rising cost of credit cards. And this is important. We asked the question, if your institution stopped accepting coins, etc., 21% said they would leave your institution. 32% of the multi-ethnicities would find another financial institution. So again, opening a Pandora's box, opening attrition, and then 42% responding that they would keep banking with their primary institution. So 42%, less than half your customers would stay with you, right? And so is cash important and managing cash? Yes. Is it a pain to manage cash? Is it a labor cost? Absolutely. And I'm here to tell you that there's an opportunity. I have a quote that I penned, my only quote, and it says, leadership is about seeing the opportunity in the challenge, and not the challenge in the opportunity. The opportunity for us is how do we leverage cash to build stronger relationships with our customers, right? To move from transactional relationships to growth categories, loans, mortgages, investments, right? There's so much money sitting on the sidelines, right, when it comes to investments, to capitalize on. The other question we asked was safety deposit boxes. And you know what? Most of you are probably getting out of safety deposit boxes. My only ask, my only recommendation, because it doesn't have a huge factor, is have a migration strategy. A lot of institutions we talked to when we presented this study indicated that they have a hub and spoke model, that they are going to keep certain branches for vaults and sending the customers to those branches when they renovate their branches, eliminating those because they eat up space, and as we know, The average footprint of a branch now is about 2,700 square feet. It's about 5 employees, right? Cash flow eats up about 1,000 square feet of that space, or 550, depending on how many cash flows you have, 200 or 500. So again, I just want to reinforce there's an opportunity here for you. That this is not a liability, but an asset. That managing cash gives one more reason for customers to come to your institution. Gives you one more reason to build a relationship with them, right? But what's happening? We asked the question, okay, so in Europe, they moved a lot of their transactions to ATMs. What about bankers here? And what about the consumers? Now, the bankers in the study ranked these initiatives much higher, in the 70s. And the reality, customers are saying, not the case. In my branch, if there's a long queue line and there's ATMs, no one's coming out to say, listen, Mr. or Mrs. Customer, why don't I take you to the ATM and I'll show you how we can do those transactions there and we can speed up the process. It's not happening. But we asked the customers, if it did happen, would it be negative? And they said, no, it actually would show respect and recognition of my time. Only 5% of the people in our study, the 1,000 consumers we studied, indicated it would be negative. And we asked them, why would it be negative? And they said, because I'm here to do a cash transaction. I'm here to meet the teller. I'm here to have a conversation. Maybe there's an issue with my statement, whatever it is. And you're getting in the way for me to get that done. 5%. All right? Real opportunity. So the growth, this was in the Future of Advice study that we did the fall of last year. The growth is, there is a huge gap in what consumers, when we ask consumers, when you're thinking of financial advice, where do you go? 4% said their financial institution. But when I want financial advice, where do you go? My bank. And the vector gap is 57% of where they want to go for financial advice, but they're not feeling they're getting that financial advice. And why is that? Why do you think that's the case? Because you're a product-driven mindset, right? How do you get measured? How many products you sell? Is that how consumers view the relationship? How many products you sell them? I don't think so. It's how you're going to reduce their anxiety. And so it's finding that balance, still being able to sell products, but to drive that through advice, because that's the gap. That's the opportunity gap. And why is that important? Because what we found out was that the consumers who are the most loyal to you view the relationship this way. They view it as a trusted relationship because you're providing them financial advice. And that's at a 92% level of importance, right? And so if you want to talk about being customer-centric and you want to drive that loyalty, you need to think of their financial anxiety and provide advice to solve that financial anxiety. So when you look at banking today, we call it banking 3.0. Let's go through that. So we did a huge study 3 years ago. We did a global study. We looked at what is driving attrition. When we talk about NPS scores, how important that is, it's not important. Because let's be honest, who here gets up in the morning to give their customers a bad service? Raise your hand. No. Do you think customers see a big difference between your institutions? You're all regulated. Right? You all care about the same thing. You're all focused on customer service. The reality is the gap. GD Powers does, A, B, C, D ranking. But when you really look at how consumers perceive that gap between A, B, C, and D, it's very narrow. But what does drive loyalty and what drives defection is the quality of advice. Right? That's what's driving defection. It's not NPS scores. Because quality advice is a differentiator in your business. It's an unmet need your customers are looking for that they're not getting. Right? Huge opportunity for you to turn that transactional relationship into a trusted relationship with trusted long-term benefits. So customer, when you look at the model, and we go through this trajectory of the different types of institutions, we've all lived through these. A lot of you are in the transactional, easy and convenient to bank, right? Digital, mobile, you spend billions of dollars making it easier for you. But the future really is customer-led, right? The future is, well, let's look at 3.0. It's, the words that you use, the words that are in the market: frictionless, omni-channel, self-serve technology, cost reduction. That's a big one. Convenience-driven, teller counters, right? All of that is being reviewed, right? And then if you look at institutions out there, a lot of you've done a really good job of creating those experiences. Teller counters, technology integration. I don't see a lot of advice, do you? So 4.0 really is focused moving from converting those transactions, those people coming in trying to deposit money, getting their coins counted, getting their paper, into relationship building. And 4.0 is all about customer-centric. It's looking at the life of the customer and their needs. It's advice-focused. It's flipping that branch. The average branch takes, when you think of a transformation of a network, there's very few banks that actually live through an entire transformation. You go through 4 or 5 cycle programs in the life of a transformation. By the time you get to branch 200, there's a new design that comes out. The next 200 get the new concept, and that goes on for a year, 2 years, and then something else comes up, and then that transaction changes, that experience changes, and then evolves. Right? It's about future-proofing that, because the reality is, long-term, like Hero, there are few branches, but also the role of branch is going to change from transaction advice. If you move those customers to ATMs, what's the role of the teller counter or the CSSs, right? That's what Banking 4.0 is all about. It's about co-working space. These are different institutions that have installed different concepts. DBS. If you want to look at an institution as kind of where the future is and learn from them on what they've done, look at DBS in Singapore. I would tell you that as we work globally, they are by far the most advanced financial institution on this planet when it comes to seamless customer experience, move from transaction to advice. They by far lead the industry. So I'm going to give you 3 opportunities to wrap up. Number one is, as you're renovating your branches, as you're looking at managing those cash transactions, help instill a level of importance on shifting to advice. How many teller counters do you have, or universal bank counters? Can you create attrition on those and drive more of that sales choreography? Do you have a lobby greeter? Is that lobby greeter motivated to make that transition? The biggest challenge, by the way, in North America, we ask frontline staff when we go do our audits and branches, say, I noticed that the ATM's not being used a lot. You've got 2 in your lobby. Well, honestly, if we promote that, I can lose my job here, right? It's overcoming those insights. No, actually, it's not going to lose your job. You're just going to elevate the value of your job because you're not going to be an advisor versus a teller, right? So moving to advice, and it's the whole ecosystem. It's not just the physical assets, the sales choreography, the training, the hiring, right? The remuneration, all of those things play an important role. We did some consulting work for a major bank in Europe, and they nailed it. I mean, they started with midi crossing the reward system. That's the first thing they did. They tied it to their training to really train the importance of making that migration. Number 2 is shift teller transactions to ATM free up time. Again, how many here have lobby leaders in your branches, right? Right, it was the first thing that got cut, right? You do it for 5 years, and then you've got a cost containment, and you let them go, and then 3 years later, you reintroduce them. They're so important. Think of it as, if you want cost containment, they're an investment in cost containment, because they're going to help migrate your customers to ATMs, to technology. And then finally, access expertise is critical. In our seamless study, what customers told us is, I want to have the ability, no matter what channel, to talk to a human being, irrespective of the channel. Don't give me that technology that, the chatbot that I have to deal with. If I want to talk to somebody, I want to talk to somebody, and I should have the right to do that. So think of the role of expertise across your channel. And that's it. If you want to email me, I will be happy to send you the full report and any insights. And if you have questions, the study covered rural, and suburban ethnicity, multi-ethnicity versus Caucasian. So we looked across those gamuts in cash usage.
Any audience? Go ahead.
Can you go back a slide, please?
Oh, yeah. Lee, can you go back to the slide with Zeno? People were taking pictures of that. Cool. Any questions from the audience on the Slido? Questions? Let me know when you guys get that. And then JP's also, he's in the front here corner if you want to talk to him. A coffee break after the next panel.
I have one question for you. Sure. So we do 4 studies a year in the banking. We're always trying to help you identify where are the pain points and to debunk biases and preconceived ideas. One was the ROI, investment in branches. I'd love to hear from you. What are your burning questions? What's the fight that you're having to make that if you had the right insight, the right facts, that would help build a case for you? Like, what are those insights that you need, right? What study could we do for you? No cost to you, like we did for the banks on cash management. What can we do for you that would help you build a better case for what you're trying to achieve? We're eager to do it. We do, like I said, 4 major studies every year. We haven't started, well, actually, our next study is going to be on the end of community banking. It'll be interesting. I'm sure a lot of your community bankers here are going to get some interesting insights of where community banking is going or where it will be going versus where it is. But any other insights that you want or need, let us know. You got my email. We're all eager.
So we got questions from the Slido. How is cash usage evolving in rural versus urban branch locations? Any differences to explain? Or
No, you know what's interesting? We thought there'd be a big difference between cash usage in rural markets versus suburban markets, right? We thought, wow, you know what? They hold a lot more cash. Not true. You know what's interesting? Is they're actually more techno-savvy than a percentage of consumers, older consumers in those markets that are using digital platforms. And the reason for that, again, 2 studies before that, we said, if you didn't have access to your branch, what would you do? And a lot of the consumers said we would move to online. Right? We wouldn't change branches, we'd move to online. Right? And so that's what's going to happen, is that most of those rural consumers have already preconditioned themselves to realize that access to a local branch is something, a fleeting moment, and that they better be savvy on the use of technology.
And that's lined up with Haley's analysis this morning.
Yes,
So
exactly.
she did as well. Any other, Lee? Okay. How does consumer interest in newer ATM technology vary across different customer segments?
Yeah, they're not.
They're not interested.
No, here, you know. So we've experimented with video ATMs. In China, we're on the forefront. The banks that we design in China, you can go in, go to this glass cube and open an account, get a credit card, debit card without ever talking to a teller. It's all automated. It looks like a copier, big copier station. We use biometrics. I know we're not allowed to do that here, but we use biometrics for everything. But here, IATMs, the place to use them is at drive-thrus. So if you're going to replace that teller station at the drive-thru with an ATM, I would use an IATM. That's the only place it worked. Lobbies, who's going to have a conversation? Think of it, just because we were in New York looking at some branches for a bank, and they had IATMs in the lobby. And I go, how's that working for you? They go, well, they're not being used. I said, well, let me ask you a question. If you had an argument with your banker, would you have it in the vestibule of a bank when somebody else is pulling money out of their ATMs? No, I wouldn't. So why would you have an IATM in the lobby? Right? So there's a place for it. We just got to be wise on where we use them and how we use them. Yeah.
Any other ones, Lee?
What are the key factors influencing consumer preference for using ATMs versus in-branch services for cash withdrawals? We're creatures of habit. Your job is to break their habit, because actually their habit is working against them. Using the bank for transactions, wasting that teller time or that universal banker time to do repetitive transactional is not in their best interest. It's not in your best interest. And so it's breaking those habits, and they don't happen overnight. You have to disrupt their current journey You got to intercept them when it's appropriate, when the moment's right, when there's a long queue line, right? They're pressed for time because they've only got half an hour for lunch. It's understanding who are our most eligible customers for moving to an ATM. Not everyone, right? That older consumer is not going to want to do an ATM. They're going to want to talk to Sally. But everybody else, they're apt to make the switch. So understand who your target group is. What is your migration strategy? Who is the persona for that migration strategy? And what's the sales choreography that's going to enable you to achieve that migration strategy? And it's a journey. It took our client in Europe 10 years. Have you started that journey? Right? If you haven't, when you have 10 years out, where's banking going to be 10 years from now?
Any other questions from the audience? Go ahead, Joe.
JP, what did you find, if anything, looking at your studies with the banks and consumers from an international perspective, North America, Asia, Europe, were there any little nuggets or uniquenesses to the different areas, the different geographies that really stood out to you?
Yeah, the adoption of technology in Asia and Europe is much more advanced than we are, much more advanced. And so they made the migration. Doesn't mean the cash has gone away because they still rely on it. Like, I was in China just 2 months ago and we went to one of our branches that we renovated and I looked at the lobby and the lobby manager comes to me and he goes, GP, we need more seats. We need more seats. Well, I said, you've got 100 seats in the lobby. They go, we still need more seats, right? Because consumers are still coming in, even though they use WePay, they've got a digital wallet. I can get from a vending machine, I can just look at the vending machine and pay with my face. They still come in for cash. It's the weirdest thing I've ever seen. They still come in to get money. We're still installing cash recyclers in China and same in Europe. So it's just psychological. Security. Money, real money equals security, peace of mind. And if they have a lot of financial anxiety, guess what? Money, peace of mind.
Excellent. Anyone else? Very good. Thank you, JP.
Thank you.
Wonderful as always. So now we're going to have the Achieving Network Optimization with New Technology. I have Chris Sicci and Matt Lilia. So welcome them to the stage. We're going to do a little panel. Thanks, you guys. So Matt and I worked together at Ventus. We met Chris several years ago and do a lot of traditional projects with him that we kind of do on a day in, day out basis with everyone else. And then one day, 2 or 3 years ago, he came to us and he had sort of this out-of-box sort of thought process. Is there a different way that we could interact and do stuff together? And so we're going to take a few minutes today to kind of talk you through that process and how kind of thinking out of the box and thinking of different ways, and sort of like JP's saying, is taking that technology shift to leverage that relationship with your customer and leverage technology from that piece. And so let's start with Matt and do a little introduction for yourself and where you came from.
Yeah, how you doing, everyone? I'm Matt Lilia. I'm Vice President of Business Development at Ventus. Been in the company for 12 years now, going on 13, so quite some time. Really focused on designing solutions, managed connectivity for customers. It's greatly expanded now between what we first originally did on cellular technology back in the day and what we can achieve now.
And Chris, yourself.
Well, you can see from my picture that I was really young when I thought of. Chris Sicci, CEO at Transfund. I've been there